Hello, hello. Good morning, Ayakami. How are you doing? Hey, BL. Hey, Diana. Hey, Pip's Apprentice. Hope you're all well. Let me know. Hope you all had a great weekend. It feels like it's been a long time since we had this stream. We didn't have a stream on Friday. We didn't want to have one yesterday because it was a long weekend here. So, welcome back. Good to have you guys with us. Hey, Jack. Hey, Spiros. How is everyone doing? Just want to make sure that you guys can hear me okay. Fantastic. Thanks for that. Just want to check through a couple of things. Hey, Jimmy. Good to see you. Alrighty. So again, thank you all for joining me on this daily market analysis. If you are new to the session, do drop a message, say hi, let me know where you're joining us from. For all the regulars, a big welcome back. Thank you for joining me. So during this market analysis, what we do is we look at the fundamentals, we look at the technicals in terms of where price is, and we look for some possible trade setups. We did not have a session on Monday and on Friday last week, so I wrote up everything on Friday. Do make sure you follow me on TradingView as well, just so that you get any updates or any charts or analysis that I post. You can get it there on TradingView, and if not, you can also join the Discord channel. The link is there. I do post updates there as well. Okay, and if you can help me out massively, do click that like and subscribe button through the session if you find it useful, informative for your trading. And if you have any questions, please feel free to put it into the chat and let me know. With that, let's keep going. A quick disclaimer: any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product. So please remember that your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. With that, I hope you've been trading well. Anyone got onto or jumped into any interesting trades, do let me know. We had someone sharing about a pound dollar trade in the Discord channel. It worked out very nicely. Glad to see. Just as we are starting this session at 3 p.m. 2 minutes ago, we did just have the UK employment numbers release, right? We did see claimant count change, go from 20.4 expected 15, came out at 17.8. So claimant count change is the number of people claiming for unemployment benefits. Number of people claiming for unemployment benefits. So the lower the better. The lower the better, because there are less people claiming for unemployment. In this case, what we're seeing here, just as it came out, it was 20.4, it came out at 17.8. So less people this month claiming for unemployment benefits, okay? But still not as low as what markets had anticipated at 15K. So what we actually saw here as an immediate reaction, just looking at the charts straight away, is that you probably see now here that the pound dollar on release of the news went from 1.2275 up slightly to 1.2286 or 85. So 10 pip move to that upside, or to the upside there on the pound dollar, because of the news on the claimant count. It did not move a lot. I don't think it moved a lot because it's not 15 and it's not below 15. If it came out at like 14 or let's see 0.9, numbers like that, then we're going to see possibly a bigger spike to the upside on the pound dollar. So better than previous, but not better than expected in this case. Okay, and following on from that, we did have average earnings index 8.1, 7.4, came out at 7.9, a little bit higher than forecasted. Average earnings index is a wage inflation number. So it's a consumer inflation. How much businesses pay for labor, the higher costs passed on to consumer. All right. So is this number adds on to the expectation of CPI later on. So in this case, we're seeing that inflation, especially wage inflation for the UK, not dropping as much as expected from 8.1 to 7.4. It is dropping slightly only to 7.9. So because of this would, down the line, not immediately, but down the line, could lead to the Bank of England maybe deciding on another rate hike. Maybe, not yet, but maybe. Okay, so that's what we're seeing there. So a bit of a good news, but not fantastic. All right, that's what I'm seeing here based on the number that was just released 5 minutes ago. Good news, but not fantastic. And that's also why you see the pound dollar pushing up towards that resistance, but not doing a lot, and probably would have to break above that 38.2 level before we're going to see sustained upside or moves to the upside. Okay. Hey Jordan, how are you doing? Got the GU buy and EU as well, but got stopped out and break even after moving my stop loss to break even. My 25 pip to break even. Held the EU the whole weekend and caved on Monday. We'll look into the euro dollar shortly, so just bear with me on that. Good morning, E Sprangers. How are you doing? Hey Rajun. Yeah, howdy, how are you doing? And D-Train, good to see you. Okay, so that was the employment numbers for the UK at 3 p.m. Let's scroll back and see. We've got big news coming up tonight, but let's scroll back and see what else happened. A whole bunch of not a lot on Monday. Okay, that's also one reason why I thought, I'm not going to come into the office or spend time at home, because there was not a lot of news on Monday. So, as anticipated, it was a relatively quiet day, because we were, or looked like the market was waiting for this big news event, most likely big news event that it's in line at 9:30 p.m. GMT plus 8 later today. All right, at 9:30 p.m. we're going to have the US CPI number year on year. CPI, again, the inflation growth number, looking to go from a 3.7 to a 3.3. So it looks like we're going to see it slow down a little bit in terms of inflation growth for the US, which will work very nicely with the FOMC's plan or pathway or, projection towards the rate decision. And if we look at, wait, what was it? I forgot now. Yeah, there we go. Suddenly I forgot, I know I started to see. If we look at the CME Fed Watch tool, when it loads, all right, we are again now currently it's at 5.25, looking to stay 85%, and this is on the 13th of December, so we're still a month away from it, right? It's looking to stay at 85% or 85% likelihood of staying at the current level, with a small percentage at 14.3 looking like it might have another rate hike in December. I anticipate that if we do see CPI drop to that 3.3% level, Would it go lower than that? I don't think it'll get lower than that. I think maybe 3.3 be a very good number. I might even see 3.4, right? I think that this will gradually lower down. I don't think we'll see my longer term view, I don't think we'll see a rate hike from the FOMC in December. I think if there's any move, we might see it next year. But right now at 14.3, we might see that slowly move towards a higher percentage, holding rates at the current level. Okay, especially if we see inflation growth slow down as they had anticipated towards the target level of 2 to 3% for the US or for the Fed Reserve. So that's a big news item to look out for tonight at 9:30 p.m. GMT plus 8. And then through to tomorrow, before our session, we have Aussie wage price, 0.8, 1.3, might move it a little bit, but it's all going to be dependent on what happens here for the US first tonight, before we're going to get an idea of that tomorrow. But the main thing I want to look at for tomorrow will be 6.7 to a 4.7% for the CPI for the UK. Okay, I'll tell you more about that tomorrow, but we are looking like it might slow down, maybe not as much, because remember we just saw average earnings not drop as much as expected. So we might see that being released at maybe a 4.8, 4.9 number, right? See, it's always been sticky, a little bit sticky to the upside. It's a bit surprising to see it anticipated to drop from a 6.7 to a 4.7. So I think we might see a 4.9 or 5%. A signal of a slowdown in inflation growth for the UK, but I don't think we're going to see a significant drop. Tell you more about that tomorrow. But for now, main thing is that we're looking at this news event here, 9:30. I'm just looking through everything else. German ZEW economic sentiment might have some impact on the euro dollar, especially if it really does go from a minus 1.1 to a 4.9. That would be quite a big swing. That would be quite a big swing. So we might, if that comes out at 6 p.m. GMT plus 8, at that 4.9 number, we're going to see the euro dollar push to the upside. ZEW economic sentiment from 2.3 to 6.1. Again, might push euro dollar to the upside if it comes out about that number. I'm just thinking about that in terms of the overall, because it seems to have bottomed out a little bit, but I don't see why it'd be at 6.1. Okay, overall what I'm looking at is we might see some push to the upside there on the ZEW economic sentiment for the euro dollar. And then we have the CPI number for the US later tonight. All right, so with that said, then looking at the charts. Before that, good morning, David. How are you doing? Good morning, Monsieur Delarose. Good to see you. Did our country celebrate Diwali? Yeah, Singapore does celebrate Diwali. We had yesterday as a bit of a holiday, and I think it went through Friday, Saturday, Sunday, Monday. Yeah, so we had good celebrations. Nick, hey Nick, how are you doing? Hey Goju, good morning. Nick says, what do you think of Lux Trading Firm? I don't know anything about Lux Trading Firm, Nick, so maybe share with me your views. Tell me more, share me about your views, and I'll look into it and then I'll develop some ideas, but I don't know anything about the Lux Trading Firm at this point in time. Okay, so now, where are we? Okay, Today is the 14th. It's been such a long time. We went from the 9th to the 14th of November. Euro dollar index, we're saying consolidating. I think that was way before. Let's bring up another one. Taking a while to load. Hang on. Hey, digital business. Good morning. Glad that you are fully back. You're glad to be back? I'm glad you're fully back. Okay, so this was the view on the 10th of November. I was expecting it to come down, bounce off that support to push up, because if you scroll back to what happened, let's scroll back. On Friday, we had a whole bunch of news. Didn't do too much to prices, but on Friday morning at 3 a.m., Fed Chair Powell surprised markets a little bit, right? He surprised markets with the comments that the bigger mistake remains not getting rates high enough, and that the US economy has been stronger than expected. That caused that bullish push to the upside on the dollar index. So what I was expecting was for it to come down, test the support at 105.65 before pushing back up again. But it needed to break above 106 to trade up to 106.25. What we had was, after that push, I'll zoom in a little bit. Let's zoom in. Wait, what happened to my box? Bring that box back. And we'll do that. Okay. Bear with me while I adjust that. Okay. So the view was that, it could push down to, right, it could retest 105.65 before pushing up to 106. If we break that, it could go to 106.25. What we saw was that it stayed up around that level. It did come down to test the support at 105.65, pushed up, did not break above 106, and then now back along this support level of 105.65. So it hasn't done too much at all. The dollar index is still fluctuating between, or has been fluctuating between, the 105.65 level and 106 level, okay, which is held by that 50% retracement level from the longer term. What I'm looking out for now, I think that we can look at that, okay, is for this push to the downside. If this closes, trades lower, closes lower, especially below this point, right, 105.60, maybe, let me just check something. Definitely don't need 23. 38.2 is right there. Right, so we have an upward trend line, we have a support level that's looking like it's breaking the trend line, and the support, if that breaks and 38.2 goes as well, then what we could be looking at is a retest of 105.35 and maybe 105.30. Okay, so that's what I'll be looking for, is dollar to break below 105.55, could get down to 105.30. Ms. Yoderos, what's your thought on pound dollar? We'll get to that shortly. We just went through the news of that. Hey, Healthy Tips, how are you doing? Okay, so let me just do that one first. Dollar index needs to break 105.55 to trade down to 105.30, which is also the 61.8 fib retracement level. Okay, so why I think that it could do that to the downside is also because if, where is it? No, not that one. If the CPI number comes out at 3.3, 3.4, 3.3, I think it'll come out between 3.2 and 3.4, that range. If that comes out that way, then again, that is going to reinforce that the Fed Reserve is less likely to hike rates, thus leading to that continued downward push on the dollar index. All right, so we're looking at weakness, break 105.55 around there, to trade down to 105.30 around there, which is the fib retracement level. We can say that there is also a swing low at 105.40, quite close. I'm not going to put that in. Okay, so that's what I will be looking out for. Then, with that, onto the Kiwi dollar. From what Nick says, from what I understand, Lux Trading Firm is a prop firm located in the UK. Okay, Nick, leave it with me. Let me have a look at it. I don't know anything about it, but yeah, well, have a look. I'll ask some people about it, and we can have a discussion about that. Okay, get back to you on that, Nick. How am I doing? I'm doing great, doing fantastic now that I'm back online. Okay, so Kiwi dollar did not break lower, did not break the support to trade lower. Now at the support level here at 0.5870. That's broken, so 61.8 has held. 61.8 is right there. Hey Matic, how are you doing? Haven't seen you for a while. Hope you're well. 61.8 is right there at the support, overlap with that swing high there. So now that it's found, anticipating dollar weakness, could be looking for this to push up. But remember that since the 6th of November, it has been dropping. All right, so we have this level there. I would say that the safest option would be for it to break, because it looks like a bit of a counter trend move right now. I know that longer is moved up and bounced back down, but it looks a bit of a counter trend right now. The safer option would be to buy it up only if it goes past 5.9. Right, if it goes past 0.59, you have a 40 pip stop loss, you have a 50 pip take profit, 35, so 0.59, 35 pip stop loss, 55 pip take profit. I would like to see that. Okay, you can try that. Can try that, right? 100 pip take profit with a hesitation at that swing high here, which is also the 61.8. That's what so I wouldn't be rushing in right now. I'll give it that space. 0.59, 35 to 100, hesitation at 5950. Okay, that's what I look for. Kiwi dollar buy 0.59, stop loss 35, take profit 100, hesitation at 0.5950, which is also the 61.8 retracement level. There we go. Okay, Okay, so that's what I'm looking at. If the dollar does continue to drop, breaking to the downside, then we could see this push up. But because it is a counter trend, I wanted to break past that 23.6. Could trade significantly higher, but we'll make a decision at about that 61.8 level. Okay, great. Now, Matic time zones. Yeah, I know it's a lot earlier for you guys now, so I really appreciate to see you guys on the session. Good to have you with me. Broke. So this was Friday's view. I was looking for it to test and trade down. It set right across. Looked like it was going to break. Did not close strongly below that level, so that trade was not triggered. Then, and in fact, I haven't entered any trades for the last couple of days. Now sitting right across. All right, Aussie dollar sitting right across. Failed to break above that 23. This is another prime example. Let me just check this. Do that. We can do that. We can keep that there. This is a prime example of why I'm looking for the Kiwi dollar to break above that 23.6 level before I would anticipate that upside move. Because look at what happened on the Aussie. It tried to break, failed to break strongly above, and then came back down again. Okay, so what I'm looking out for here is, again, dollar, that swing low is fine, but we take that away for now. That's more immediate. Okay. Buy it up, that makes sense. I'll be happy with that view there. But remember that tomorrow morning we do have wage price index again. Remember that wage price index is a consumer inflation, it's an inflation number. Australia has seen an uptick of inflation CPI number the last time around. So 0.8 to 1.3 might lead to another uptick in inflation number. Could push this up. This would probably be something for tomorrow. Pushing it up past this point. 6390. Let's have a look at what happens if we do 6390. Stop loss 30 pips. Take profit right up to this point or that high there, 60 pips. We can look at that move. I was initially thinking of the possibility that we sell it down below 0.6340, stop loss no more than 20 pips, take profit 50 pips. That was my initial anticipation, which I kind of like a lot more than buying it back up. Alright, okay, I'm going to keep that view because we have that upward move on the Kiwi dollar already. So I think that, let's look at if the dollar does not break or comes down to this point and bounces back up, then we could see this push down. In this case, it could look something like another round like that. Okay, so 6340, 20 to 50. I would prefer that. Okay, 6340, stop loss 20, take profit 50 to sell down on the Aussie dollar. How much AUM do you think we should have before going full time? On a prop firm basis, well, the big question now is how long is the prop firm going to survive for? So that's one thing to think about. It depends. It depends on, I mean, in terms of how much, the question is how much AUM do you think we should have before going full-time? I think it comes down to not so much about the quantum of AUM, it's really what kind of results you're getting, what kind of percentages you're hitting, what kind of requirements you have, that's going to, and confidence level that's going to lead to that decision on, when to go full-time. All right, Nick? Now, with this Aussie dollar, okay, I'm happy with that. I made a mess on the US yen on Thursday. There was a big typo there. But that aside, now looking at the yen, I know many people were very excited at that point, 11 p.m. last night, 11 p.m. GMT plus 8 last night, when the dollar yen went from 151 almost 151.90 down. And I'll show it to you on the 15-minute time frame. No, actually on the 5-minute time frame. Let me take that away. You'll see that in the first 5 minutes, it went from 151.90 down to 151.33 and then slightly lower again before bouncing back up. I'll put that in just to show you one other reason why it bounced back up, right? Came out way outside of Bollinger, next 5 minutes, again way outside of Bollinger, bounced right back in. Okay, so it bounced right back in. Back to the H1 time frame. Where am I? There we go. Again, you'll see that it was way outside of the Bollinger Band here, and that's also why it came right back in again. The question a lot of people had or were asking, not just you guys, but it was, no, actually I'll leave that there for now. The question was, was this an intervention from the Bank of Japan? I don't think so. It wouldn't, if it was an intervention, it would not be such a small move. Okay, it was only actually a 67 pip move to the downside, right? Compared to the last time we saw, when was it? Let me just scroll back. That move there, right? And that was a good 290 pip move to the downside. So in the scheme of things, very tiny move yesterday. I don't think it was a Bank of Japan intervention, right? And you can see this on H4 time frame. It is still sitting at that resistance level, right? At 151.70, about 151.70. Still sitting right there. If you remember, I was telling you that as we approach this resistance level, we're going to see very choppy price action because there are a lot of people, a lot of traders, investors out there who are possibly adding in sell positions as it moves up because they're expecting the Bank of Japan to intervene and then they'll catch the big 300 pip move. Oh, that's 300 pip move to the downside. Okay, so it's going to be very choppy, and we only see that with the Bank of Japan intervention. For now, I would say that there has been talk, there has been increasing numbers of talk, but doesn't seem like it's ready yet. Okay, but although we say that, you can take that way. Although we say that, I would say that it's too dangerous to be looking to buy it up right now. The safer option would be to look for or to prepare for the intervention. Right, this is very far away. Mind you, this is at 23.6 level, and this is possibly why we see price come down to this level and bounce back up, because it tested 23.6, failed to break, and then bounced back up. in addition to the Bollinger Band, in addition to not being a Bank of Japan intervention. What you could look out for here is selling below 151.50. In this case, stop loss would be about 30 pips. Okay, keep it tight. This will be a bit of the earlier entry, a little bit more aggressive. 150. We don't have to confirm. This is not likely a Bank of Japan intervention, but trying to catch the market moves. What you'll be looking out for will be a move down to 38.2. Right, so you're looking for it's tested 23.6. If it does break down again below that previous low there, the bodies could get that way, 30 to 62. Alternatively, a bit of a safer play would be below 151.20. Most likely in this case, if it does break and sustain a break to the downside, then you're going to see a big move. Could be like 50 to 110 pips move to the downside, most likely a Bank of Japan intervention. Okay, so that's what we're looking out for. But I'll highlight this one, 151.50, 30 to 60, and then we could drag that down if it continues heading lower. So we're looking for US yen to sell. Make sure I type this right. 151.50. Stop loss 30. Take profit 60. Stop loss 30. Take profit 60. Okay. So why this is also because look at dollar. Look at the dollars forming up quite nicely. Looking for this to break to the downside, that's going to drag on the yen to the downside as well. So that's what I'll be looking out for. Take away a couple of these lines for now. All right, there we have it. Then onto the pound dollar. Look, sustained move because of, well, slightly more sustained move because of the employment numbers that we just saw released at 3 p.m. GMT +8. Take that away. A number of you did very well on the pound dollar, trading it up. Right, we had it in that consolidation, break out the consolidation, push towards that resistance. So it's doing very well right now. We just took that, breaking above 38.2. We'll probably see 50 approaching. Right, it's approaching 50. 61.8 very near, so I'm not too fussed about that. Take that one away. Okay, so that one's done. If this continues pushing up, and we know why. Firstly, the dollar pushing to the downside. Secondly, better than previous numbers. Not better than expected, but better than previous numbers for the UK, causing this to push up. Right, so it started there before the release of the news. Right now, coming towards a 1.23 level in just over 20 minutes. It needs to close above this point. Doing okay on the Bollinger. Not out of it yet, but I think that, okay, if this continues pushing up, then it would be likely to be outside the Bollinger Band, so something to watch out. But we have 20 minutes, so it possibly could just slowly push up to 1.2315. Good morning, Etir. How are you doing? How's Belgium? So 1.2315. Stop loss 40 pips. Stop loss are getting a little bit wider today, but it's just based on the levels that we're seeing. Okay, so I'll put this as a support. You can possibly look at I think I know what Dinah is going to ask. So you can possibly look at a move like that. right? Which might give you a slightly lower entry point. But I think that I would want it to clear past these high, past that 50% level. That's why I would say 1.2315. How about there? 40 to 100 on the pound dollar. Okay, so take that one away. Pound dollar, we're looking to buy 1.2315, stop loss 40, take profit 100 to the upside. Okay, I'm happy with that. Hope I answered your question there, Mr. Delaros. And also Jordan on the pound dollar. Then on to the euro dollar for the Monday's mental fortitude, right? So that's pushed up. That was actually working quite nicely. This support level is holding so strong on the euro, that 38.2 support with that swing lows, leading that push to the upside on the euro dollar. Again, like Jordan was saying, closed out of or moved to break even and hit him on break even or close out the trade. I would say that that's a good level to have, a good support level to have. I wouldn't have moved it so quickly. I would have looked for it to break past 61.8 before I would close out. Okay, I'll show you an example. So if you did get into that trade, right, I would hold on to it only if price gets past, so if it goes up, gets past this point here. I'm just scribbling. If it gets past that point, then I will look to put that to break even. Right at that point or anywhere before that, it'll be too early to move to break even. When if it gets past, then I'll move it up or even move it to secure some profit. Okay. Then if it doesn't clear past that point or it sits there, then I will close out the trade with a 30 almost 40 pip profit to the upside. Hope I gave you some ideas there. On the euro dollar, right, remembering that we do have the ZEW economic sentiment, the German ZEW economic sentiment later on at 6, which is 2 hours away. What I would be looking at in this case would be needs to break past 61.8. In fact, it just did that. So that this level already almost broke past. So actually it needs to break past this swing high here at 107.25. Give it a bit of time. Dollar still looking like it's pushing to the downside. What I've been looking for here would be 1.0730. Take profit up there. Oops. 30 pips. I wouldn't even rank this very high, actually. I wouldn't rank this very high because there's not a lot of space and it could very well just get to this point and reverse. Alright, so we know that, or rather we want to see a reaction along this point. It could reverse from here as well. It could reverse from here. Right, so the next 2 hours we could see it push up and then after that turn back down. But I don't think we could see that, but I think it would be a low likelihood. We could see this push up this level. Okay, 1.0730 to 35. Let's look at that one first. 1.0730, stop loss 15, take profit 35. EU would take external liquidity and then move to an internal one, which is imbalance. I'm learning about liquidity. I haven't got to the point of external and internal liquidity. So let me see what are you referring to? So I think what Diana is referring to is that it could get up to that point. So do that, and then move back to internal, which is around there, and then maybe push back up again. Yeah, I want to see a reaction there. I think that's what you're referring to. Okay. Yeah, I could test that, come back down to this point. Main thing is I want to see a reaction at 107.25. But I think that could happen. All right, let's add that in and say that look for reaction at 1.0725. We could look to buy at 107.30, 15 to 35. Okay. Monsieur Delaros said, do you think we should stay clear of trades until upcoming Fed speech by William? I don't think so. I wouldn't. We have Fed members speaking, with SMB speaking later, soon, or now. Opening remarks. I'm not too bothered about that. Jefferson speaking, Phil Barr, MPC Phil Barr. I don't see William. I don't see member William speaking. Yeah, but I don't typically, if you sit around waiting for them to finish speaking, then it's just going to be a lot of waiting and not a lot of trading. So I would plan for the move, I'll plan for the setups, and then activate based on that. Okay, Mr. Delaros, not worth staying out just because of that, unless it's Fed chair and it's coming very close. The Fed chair Powell. Diana says imbalance a bit lower if you can see the big candle. That one. This imbalance, oops. This imbalance here. So I'm thinking, oh, you're talking about this one here. Looks like it's going to do that. The reason why I don't see it coming back down a lot, right? The reason why I don't see it coming back down a lot is because if it comes back down a lot, then we're likely to see the dollar index go back up quite significantly, right? Which means that it could come to this point and bounce, which is fair. But it does look like with the news, we might see that push a little bit lower, CPI number later, right? So I think it would, I think it would push up, test a little bit, maybe a bit there, and then push back up again. But we'll look out for that. Main thing is a reaction along that point. Good morning, Booba. How are you doing? Let me think. Yeah, I still want to see what happens there. We are seeing the dollar retrace a little bit, but I think it should continue to the downside. We'll watch out for that. So that's fair. Then on to the US Swiss franc. You're welcome, Diana. That didn't push up. I was actually so happy that, again, this is not something I trade. I do the analysis on Swiss franc. Never had a I never liked to trade US Swiss franc. You all know the story. So this was something that I looked at. Bounce off. I thought, great. Was it going to push higher? Did not, and came back down again. Right now, breaking out, look like it's breaking out of this channel, mainly because the dollar index is looking like it's pushing down, right? So what you could be looking out for in this case would be something like that. Break out the channel to the downside. I'm just thinking, okay, I was just thinking whether it's worth the risk. So below 0.9, stop loss no more than 20 pips, take profit almost 40 to the downside. I don't like it that much. Let me see. Channel break 0.9, yes. To the downside towards this point here, yes. That's 40 pips. That, if you had nothing to trade, I think that'd be fair. Something to look at. But it does need to break below 0.9. Okay, so sell 0.9, 20 to 40 on the Kiwi, not Kiwi, on the Swizy. Sell 0.9, stop loss 20, take profit 40. Okay. Then CAD pushed up, came back down, would have hit stop on that. Would have hit a stop loss of 30 pips on that, right? As it immediately found the trend line, but broke out slightly before bouncing back up again, right? Before bouncing back up again. So if you did get onto that, it would be a 30 loss. And what I'm looking at now, that's done, but that move, $23 broken, 23 is done, 38 is there, that one is, I'll take that one away, 38 is there. What you would notice here is a bit of a choppy consolidation at this point. Let's take that away for now. And we'll consider that move. CAD, no news on CAD. Breaking, I like how it's, I'm just trying to think of how to represent that. I like that it's failing to break higher, right? It's struggling to break higher. And you see that that has that move there. So it needs to break down from this point below this level. You can see it trade lower, but we do have another point about here. Okay, so now with that, then I'm considering this move at 38.2, that 50 is right there. Okay, so this is what I'll be looking out for on the CAD. Struggling to break up, then I'll be looking to sell it down, not yet. So 1.3780, 1.3775, stop loss 20, take profit 60 to the downside, with understanding a bit of a hesitation at 50. Okay, so that's what I'll be looking for. That's bouncing back up a little bit, that's fine. 1.3775, stop loss 20, take profit 60, hesitation level. 1.3775, stop loss 20, take profit 60, hesitation at 1.3745. Hesitation at 1.3745. There we go. So we're looking at that to push down. Could it push up? Yes, it could. But okay, so it could go higher, but what I'm looking at is, because we have this point there and it failed very recently over the last week, if you are looking to buy this up, then even if you caught it there, that's only a 30-40 pip move to the upside. Stop loss you'd be 20, like that. Okay, but even that's a little bit aggressive. You could be looking at that, but overall, I'm looking at dollar weakness to push this down. Okay, does that make sense? At this point, do remember to help me out. Click that like and subscribe button on YouTube, the little rocket ship button on TradingView, the hand clappy button on trading.live. Good, thank you so much. And then we get to gold. Right, I was very happy with this on gold, where we were looking at it to break, right? So the thing was, price breaks the support level, trade lower towards 1946, it came down to 1946. If it breaks past this support, it will come down to 1933, which is down there. So what happened on gold was, on Friday it came down, came down to 1946, broke 1946 down to 1933, found that support, right? Came down, failed to break, lower, found the support, and on Monday bounced back up. Right? On Monday bounced back up, now sitting at that support turned resistance level. And if I did that, you would see that 23.6 is holding. Now, remember that we have been talking through this whole session, we've been talking about, that level holds quite well. Okay, we've been talking about dollar weakness coming back into play. So if, let me see, dollar weakness coming back into play should push this up. The only time you start thinking of gold climbing a sustained move to the upside is if it breaks above 1950. It could get to 1969, but it needs to break past this point first, which is 1960. Okay, so that's what I'll be looking for here, would be for gold to break, well, to sustain the move to the upside, it needs to get past 1950 towards 1960. So that move, if it breaks past that point, we could see it get up towards 1970. All right. So here we go. Dollar to drop, so gold could recover above 1950, could reach 1960, resistance at 1971. At 1971. There we have it. That now the all eyes, we got 1 minute more, so it's not going to happen on this hour, it might happen on the next hour, it might completely reverse, but most likely looks like it's going to push a little bit lower on the dollar index to the downside towards that 105.30 level ideally. Okay. So with that said, remember again, if you haven't already, the Discord channel link is there. I look forward to seeing you on Discord. And if not, I will see you all tomorrow, same time, same place. And we'll talk about tomorrow the CPI, the CPI for the UK and the retail sales number for the US. Okay, so with that, please remember, trade well, trade safe. I will see you all on Discord, or if not, tomorrow. Take care now. Bye bye.